Well, g'day there, traders and friends right around the world. It is James here with you on behalf of Pivot Point Trading, bringing you this very important and timely Tuesday afternoon market recap. What an interesting way to begin this week's worth of trading. The first two sessions have been heavily mixed. We started Monday across all three of the US markets with some form of a bullish continuation. Yes, we saw the gap up on the NASDAQ. We were left with some form of a spinning top type of candle. Today, however, we were sold off and we moved down 10.5 points on the actual index itself. The Dow Jones Industrial Average had that similar candle. We didn't see the gap up, but we did at least finish and close with another doji candlestick right at this very, very critical resistance level, which has been in effect once again for 4 months. Today, it closed down 181 points, largely due, of course, to the IBM earnings. And here we have the S&P 500, a very similar type of candlestick setup. Over the weekend in Pivot Point Pro, I made it very, very clear if you wanted to get aggressively bullish behind these markets, and if you're looking for a legitimate breakout, first of all, you wanted to see all three markets. Let me just bring up the right color. All three markets in agreement. You wanted to make sure that the Dow Jones and the S&P were following the NASDAQ higher. Now, although the NASDAQ is still more or less where we closed at on the Friday, you can see that this is really struggling to gain any conviction or traction in the most recent leg higher. The Dow Jones Industrial Average didn't get anywhere near to its respective May high. 18,300, give or take, is that figure which we've been paying attention to. Our actual bullish trigger on the Dow Jones Industrial Average comes in at 18,386. If anything, this most recent bullish pop on the back of some form of a Greek deal or some form of resolution to the whole Eurozone conundrum has just been sold. We've seen the bounce back up into this resistance area. Again, we are establishing resistance areas, and on face value right now, it really feels as though we are once again going to continue this sideways consolidation across all three of the markets. What I'm trying to hint at right now is that this NASDAQ breakout may be another false signal. If you cast your mind back to late June 2015, again, I was saying I wanted to see all three markets in agreement. As the NASDAQ made that historic high, dating back to the year 2000, the Dow Jones Industrial Average was nowhere near its high. It was quite significantly lower. And also the S&P 500. It did come up a little bit closer, but we didn't see that true continuation above resistance levels. As the market stands on this Tuesday afternoon market recap, again, we do not have clear signals. If anything, it really looks as though once again we are finding selling pressure and resistance at this level around 18,150. Obviously, yesterday and today's trading session, IBM heavily traded, a big gap down. We closed at 173, give or take a couple of pennies during Monday's trading session. Today we closed at 163.07, down $10.15. So I told you over the weekend I would bring you some updates in regards to earnings if in fact we did see some legitimate signals and some legitimate trade setups. This 161.81 a trade trigger is a trade trigger that we've had on IBM for quite some time. Even though we've seen this natural cycle back up to resistance, it really feels as though we're going to see a definitive move below this 161 area, and very quickly we will come back down and retest 159. So I do have this open order in my account for Wednesday's trading session. After the bell today on Tuesday, Apple has also reported earnings. I believe in the after hours markets, as it stands, we are trading down just over 6.5%. And if the futures hold the value which they are currently trading at, Apple is also going to gap down and open around 122. I won't be all that interested in trading Apple during Wednesday's trading session. However, there will be an exception if we start to close below 117.35. I understand where it stands. However, that will be a $5 move on top of this right down in the after hours market. So I'm not sure if this will actually trigger, but the figure and the value which I'm paying attention to very closely is that 117.35. If we see a legitimate price close below this level, then our next price expectations in the way of support comes down here just shy of $105, about $106 for the stock price of Apple. Outside of IBM and Apple, and of course where the market stand, just to refresh and just to sort of surmise everything which I've just said, again, I can see the legitimacy to a bullish breakout, but for me to get or to be 100% behind that breakout, I need to see the Dow Jones and the S&P above their respective highs. Until that eventuates, again, I am still cautious on these markets. There's a reason why these markets have been moving sideways for the past 5 or so months, 6 months or so. If you factor in January and February 2015, there may be some rumblings under the surface which we aren't aware of. However, the best thing about technical analysis is that price action is king. And at the moment, there isn't really a good technical reason to suggest for you to be jumping in and to be buying this market, even on this most recent sell-off. Obviously, with the Apple earnings, I assume that the market or the futures themselves will probably open down tomorrow. It is a big composite of the NASDAQ and also the Dow Jones Industrial Average most recently. So I'm not jumping into any put positions on these markets. I'll just be following how Apple trades and how the breadth of these market continues to move as we progress further and throughout July 2015. We're getting closer to a legitimate signal. At the moment, again, we're still very, very volatile, and the signals themselves are very mixed. They're very, very bifurcated, and there is no true, I guess, trend underlying this market at the moment. It's plateauing, it's moving sideways, we're in a consolidation. I'm still interested to see whether we will break out above resistance or if we will get a legitimate close and continuation below support. I will keep you updated in this YouTube channel as time progresses. Outside of that, commodities markets, again, gold and silver absolutely hammered first thing on Monday morning. Let me just bring up the right chart for you right now. We closed below that macro support area. This is really big news for the price of gold and also silver. Generally, what will happen is that you get that definitive break or you get that first surge to the downside, but then there will ultimately be another retest of the pivot point. You see it time and time and time again with markets, ETFs, and individual stocks. So it wouldn't surprise me whatsoever to see gold rally back up, retest about 110 or 111 on the ETF itself, and then get that legitimate rollover up at this location. If not, again, it doesn't mean that it has to happen, but this could absolutely fall out, and we may see a lower price in gold if it doesn't want to retest down here just under $100. Obviously, you can assume that 100 will be a slowdown for the price of GLD, but right now there isn't really indication whatsoever to be looking at this as a long-term buy at this particular moment in time. I understand it's very cheap, but right now even the technicals are not suggesting that we have bottomed in the price of gold. And also for silver, I'll bring up the silver chart also. I mean, it hasn't had the as much of a sell-off respectively as gold it has been pumped recently. 14.14 it closed at. As of Tuesday, again, I'm still open to that retest up in this sort of red rectangle drawn on my screen. This would be a perfect 1, 2, 3 retest and then a rollover if it sets up. Outside of that though, these lower levels on silver come in here about $11.80 and ultimately as low as about $10 on the ETF itself. Another interesting market right now is the Dow Jones Transportation Average. This is what I have been looking at for quite some time now. And even in the face of a sell-off in the Dow Jones Industrials, we have seen quite a nice little bullish candle. 60 points it was up today. So it's sort of moving a little bit counter to the other three equity markets. This is somewhat expected given that we've come back down. We've hit our target at 8,000 and we're expecting a bullish bounce up until this level again. I'm not sure how high this market will rally, but right now it looks as though we are legitimately going to come back up, retest that macro pivot point, maybe set up another lower high, and then we'll get that rollover on the Dow Jones Transportation Average again. So that's really the market recap as at this Tuesday afternoon. I personally do not have a lot going on in the way of individual trade positions. Again, for a long time, I've been more or less a spectator in this market, given the amount of volatility and sort of the whipsaws going back and forth. Personally, I'm just happy to watch this market, to see how it plays out, and just to get excited about the legitimate consolidation break when we start to break above these ranges. Ultimately, it will break, and it has been frustrating sitting through this entire period of being very selective in the individual trades. But I mean, as time progresses, we start to see these types of price movements materialize, and it really crystallizes our view on the overall market. Right now, however, based on Tuesday's afternoon market recap, we're at the close on Tuesday. It's really, really tricky to be positioning yourself bullish given what we've just seen on the transport to location where it has set up, and of course establishing once again that lower high. So I'll keep you updated, of course, when the markets, or when there's a reason to actually cover the markets. Obviously yesterday on the Monday we just saw that variation of spinning tops, and for people in that pro discussion who were privy to that discussion, they understood at least my concerns on the market, given where we are trading and the amount of overhead resistance on the S&P and the Dow Jones, which we need to overcome in order to, once again, align ourselves with this macro bullish trend. So I'll leave it at that for this Tuesday afternoon. Have a great evening, everyone, right around the world. If you have any questions whatsoever, email me, success@pivotpoint-trading.com. Outside of that, I'll be back with you most likely on a Wednesday, definitely a Thursday. We'll see how Wednesday's trading session outcomes or how it unfolds, pardon me. And of course, I'll bring you an up-to-date Apple earnings announcement at the close on Wednesday. So I will be with you tomorrow afternoon as well. Interesting again, write down that figure, 117.35. All the best traders and friends right around the world. Have a great evening. Goodbye.